Got a new weekly outlook for October 13th till October 17th. Let's get right into it. Starting here with the news, we have a bank holiday tomorrow. So, Monday, bank holiday for dollar, which means probably, not much going to be going on. Even though tomorrow's going to be like the first day back after the huge day we had on Friday. So, either, some uncertainty maybe in the markets, right? With that pretty historic crash we had last Friday, but I guess we'll get into that when we get to the charts portion. But Monday, bank holiday. Tuesday, we have a Powell speech during lunch hour of the New York session, and I guess a pound speech around that time as well. Now the dollar speech I think is a little more important overall. Obviously, it's also Powell speaking. So yeah, actually one of the rare dollar folders that is going to happen. Then Wednesday we've got nothing. Thursday we have a London Killzone pound folder, and Friday we have nothing. And then all these folders here. The PPI that is on Thursday, tentative, essentially just means, as it says here, tentative events are subject to delay, revision, or cancellation because of the government shutdown. Now, I wonder if they pushed NFP again or if they've taken it out completely. Okay, so they've pushed it to next week for now. And CPI as well. Okay, interesting, because this week was actually supposed to be CPI. Originally, I saw that in the economic calendar, I think, maybe like last week at some point when I was looking ahead. But they moved CPI already to next week, and then these are still tentative, but most likely will then not be this week yet, unless I guess the government shutdown clears up before then. All right, yeah, let's get into the charts. So dollar seems to finally be making somewhat of a move towards that pretty clear swing high we have had marked out for a while now. Finally kind of breaking out of this consolidated range. I'd even say as far as last week we were still in that range, right? Finally pushing higher from there. I mean, yeah, to me, looking at dollar, this is pretty simple to analyze, I guess, to see what I want it to do. I'd want it to go higher. Yeah, I'm expecting higher prices on dollar. We do have two separate fair value gaps in here, also two volume imbalances. So I'd expect sensitivity in price somewhere around here, right? And that is what I would want to see. Like worst case scenario for bullishness, I'd want to see a bounce like body wise respecting that essentially, because we have these down close candles here. I don't want to see that order block here be respected, and I want to see this lower gap at least be respected on a closing basis. If we close below this level, yeah, I'd rethink that bias, but overall I do still think we have some business left up here, so to speak. Euro, obviously kind of like the reverse idea then, looking for sells potentially to play out. Now, the thing on euro and pound is we don't really have anything to trade, right? Like, almost, but not quite daily gap. So, yeah, nothing really trade-wise, but I do also expect, I guess, in line with what dollar does, to see some kind of maybe a retracement higher still, right, with dollar kind of in sync to dollar digging into these levels, and then a run higher. Now on pound, this is what I actually wanted to refer to when I was looking at euro a second ago, I think. Yes, pound has like a very small fair value gap here as well. So that is valid in theory. So yeah, if we reach up into that, I guess we could look for a trade. Obviously, with the fair value gap like that, we just really need to see like a wick into it and then insta dip. You don't want to see too much fucking around in there, right? Because if it's like if we trade to it and we close in it, there's a good chance we're not closing in it but above it. So, there's that, right? But yeah, overall, I guess that could be a potential trade to look at, right? We still have a very clear bias, in my opinion, especially on pound, where we have been kind of calling for sells for a bit now. I don't know, that is actually lined up on the right candle. And in my opinion, those sells aren't done until we reach the equal lows. So, yeah, I'm sticking with that bias because it seems to have been playing out. Now, the fun part, I guess, indices. I'm actually going to zoom out to the monthly for this initially and look at both NQ and ES. Now, I see two possibilities here for the indices, honestly, and I'll go over them real quick here. Okay, so the first possibility I see, actually, for this, let me go to the weekly chart. The first possibility I see is that, as we do often on NQ when we have like a huge move down, we just insta turn it around, right? Like on these big down close candles, at some point we just kind of always flip them very quickly. So, scenario one, this weekly gap that we traded into and closed inside of, respecting consequent encroachment on that weekly close. I do want to note that, right? Not quite respecting consequent encroachment, but kind of like almost, but closing inside that weekly gap, respecting it. So one scenario is we're going to instantly just bounce out of this weekly gap and continue higher. That is, in my opinion, the more unlikely scenario, but right, if we look at the 4-hour chart, we're trading inside that weekly gap. If we get like a breaker here and it's inside the weekly gap, we have our SMT and whatever, it's a valid trade, right? Like for the model, for the swing model. So that's scenario one. Now, I do have to say that is the scenario I do not think is going to play out. I just don't see it. And scenario two is looking at the monthly chart on both NQ and ES. We have these monthly gaps from like the first half of this year. So on NQ, that would be 22,823, and on ES, that would be 6284. That I think are pretty clean high time frame draw on liquidity, right? Because we have 3 stacked higher lows on the monthly chart, right? So July, August, and September, none of these monthly lows got purged after they were made, right? So July made a low, August made a higher low, September made it a higher low. So this is low resistance liquidity on a monthly chart with a monthly gap below, actually 2 if we're going to be exact. And we also have this monthly order block here from that initial tariff drop. So I could see us potentially working our way down into this if we get that downside continuation. And with that idea in mind, what you would want to see here is potentially to form a fair value gap, obviously around this big drop, and then see a continuation and levels I'd be looking for in that case, because it would probably be like a very big fair value gap. So the levels I would be looking for would be, for example, first I'd be looking for this wick and the low of the wick and the gradients of the wick to give us some sort of sensitivity potentially once we like say we have a daily candle here that looks like this, right? And then we trade into this, 800 point daily gap, right? Like we could respect it, but trade 700 points higher before we respect it. So I'd want to look for sensitivity, not just like, okay, we hit the gap. Let's look for sensitivity here. I'd want to see it line up with levels in here. So this wick would be something I'd want to watch on the daily chart. And we could watch this bearish breaker right here. if we push through that wick, right? And then obviously with all that, we would need to see a valid hourly SMR. So yeah, I guess that's the outlook on indices. I am leaning bearish, but I'm going to be cautious because that is a historical day we just had. And then last but very much not least, we have gold. Yeah, this is last week's candle, so gold has, I guess, had a pretty clear trend, quote unquote, going on. Now silver actually had the first kind of damper to its price run. So who knows? Who knows? Maybe we potentially reach down. Damn, I just doubled up that sentence like crazy. Reach down into this weekly gap on silver. Who knows? Now, if we look at the daily chart, silver has consolidated last week, and gold has very much not consolidated last week. So for gold, I have a very simple outlook, which partially stems from the fact that we're in a trade, but we hit this daily internal. We respected it so far. We have a nice reaction out of it. We have a swing low formed inside it. With that, I would expect this to be a bullish candle Monday, right? As Monday does so often, looking at this candle, Monday rips, right? Thursday low, Friday continuation, forming the swing low, Monday rip. Wednesday low, Thursday continuation, Friday continuation, Monday rip. Thursday low, Friday continuation, Monday rip. All from daily gaps. So we have a pretty clear pattern, so to speak, going on. And yeah, I don't see why not. This is the trade I am in on gold, right? We dropped into that daily gap. Then we had our daily consecutive candle SMT here with this order block where we took out the short-term low, eventually closing above it here with displacement. Limit set at the order block, stop down here, target here, letting it run. So we've been holding that through the week. Hopefully I don't get fucked, but I don't think there's been any like big tariff news that would lead to gold gapping. So I think we're good on that front, hopefully. But yeah, I mean, as long as we don't get gapped, that would already be decent. You know. And then yeah, we'll see how that plays out. But my expectation for gold is really just like, you know, looking at this, who am I to say this is going to be the time where it turns bearish? I'm not that guy, pal. So, you know, for now, we're just following the trend, so to speak, and yeah, maintaining the expectation of bullishness and higher prices. And that's how simple that's going to be this week. All right. That's the outlook. Yeah. Hopefully we have a nice week of price action. Even though we have those government shutdowns, maybe Trump's tariff thing has brought some volatility to life. Who knows? We'll see. But yeah, I'll be back with the recap or potential trade recaps. Probably a trade recap on this because I assume TP or SL, it's gonna play out this like probably in the first half of this week. So yeah, we'll see. Anyway, that's that. Peace out.